a big votary of market cycles. Over the years I've interacted with you. You've said that, look, the nature of equity market is that they follow a cycle. This cycle also will have a time, or this cycle will have a level. So if this bull market, which was born in the throes of pandemic, 2020, 2021, how long before this bull market reaches its climax?
That's a good question. And I've written on this theme in the last few months. That typically a bull market has a life of between 4 and 6 years, if you look at long-term history. Bear markets run between a few months to maybe 2 or 3 years. COVID lasted 1 month, okay, which was, I think, my view, bigger than a nuclear war itself, because nuclear war will not flatten the whole world. This one flattened the whole world, and it lasted one month precisely. I think the complexion of bull markets and bear markets itself has changed. It no longer will be a grinding bear market that we have been used to. Because of the reason, and there's a longer discussion which maybe we should have at some other point, but because we have weaponized something called interest rates. Earlier, interest rates used to be a blunt instrument as we grew up learning in economics. Now they become a scalpel, they become a razor, they become like a machete. When they take it to a problem aggressively and they hack the problem down, it's become a sharp instrument. Because of that, the bear markets are scared that if we become too bearish, we'll be caught napping, which is exactly what happened at the bottom of the COVID cycle. So with that being said, we think, I mean, at least my view is, we are in the 5th year of the bull market that started in 2020. I think we are getting the wobble precisely because of that reason. This is not a young bull market. It's somewhat of a middle-aged to a slightly late-age bull market. It's not got the legs of the 2020, 21, bull. And there is a reason why the animal in the stock market is a bull. Bull cannot run too fast for too long. Otherwise, we would have had a horse as the let's say, the animal to represent a bull market or an upward market. So bull and a bear both are short-sighted. They are heavy animals. They are not very fast for long periods of time. They are ferocious, but again short-lived. So we are probably a middle-aged bull market. We might have a stumble. I think the GDP or this enthusiasm, bubble, josh, hosh, whatever you're saying is all symptoms of that problem. I wouldn't be surprised if we, not on an index, but maybe individual stock basis, fall 20, 30, 40%. I think it's good if such things happen. Let retail investors also learn that when you're out playing cricket, you will get hit on the body and the head. There is no escaping that. You will become a better batsman when that happens. Instead of playing on feather beds with Ranji Trophy level, go to Australia and Perth and make 100. What's wrong with that? So I would welcome that. I will get hurt too. I will also lose money. But I welcome such opportunities to sharpen my skill. So if you look at a loss as a tuition fee instead of as a loss, you go to school, do you think your loss is a tuition fee? No. You want to give tuition fee. It's the same as a tuition fee, expensive one, but pay it. So I think we are towards the later end of this bull market. We might have a breather. We might have a time-wise correction. I don't think it's a crash. I really would be very surprised because there's no condition that justifies that thesis. But we might take a breather for 6-8 months or for a year. I would not be surprised if that were to happen. Return expectations are off the charts. Ramneet and I were just there, and somebody was talking to us, and he said, made only 50%. And Navneet was saying only. So I think return expectations should moderate. That's the other thing.
So if